Hey Trade Pros, this is Mark coming at you guys from the YouTube studio here in Toronto, Ontario, and we've got something excited planned for you today. In today's video, we're going to talk to you guys about the top 5 economic news events for Forex. So a lot of traders that get into the Forex markets like to start trading around volatile events, and there are a lot of data releases that come out on a daily basis, on a weekly basis, monthly, and even quarterly. And it's a little bit tough for the newer traders to kind of go through all of that data and sort through which releases are the most important and which releases have the highest impact on the markets and provide for the most amount of volatility. So that's what we're going to cover in today's video, and let's get at it. So the first event that has a lot of volatility, I'm sure you guys will be familiar with that. Those are our labor market statistics. Why are labor market statistics so important? Well, a big part of that is because the Fed likes to look at labor data, it likes to look at unemployment growth, they like to look at average hourly earnings, and they like to look at the NFP numbers when determining forward guiding policies. So these numbers are released on the first Friday of each new month, which we're going to see this week on, I believe it's going to be April 4th or April 5th. And so these events have the highest amount of volatility in the Forex markets simply due to what they mean. And so a lot of traders will have their eyes on the labor market stats, especially that NFP number. And this is a really big data figure. So if we see on average a beat, what that means is essentially there's more jobs created than forecasted. We should see appreciation in the US dollar. Whereas if we see a huge miss, such as what we saw last week, where we were expecting around 175,000 new jobs added, and we got minus 20,000 figure, that was a big miss, and we had a lot of volatility in the dollar as a result of that. So first one here, labor market stats, that's the big one. First Friday of each new month, make sure to mark that down on your calendars. That usually comes out around 8:30 a.m. Eastern time. So it's important not to be in any positions leading into that announcement, letting the numbers come out, and then take advantage of the opportunity on the back of that. The second big economic release is the GDP numbers. This is a broad market overview. This essentially shows the health of the economy, what we're able to produce, and it's released quarterly in 3 different parts. So these parts are the advanced GDP, they're the preliminary GDP, and the final GDP. So these are released over a 3-month period. The first one being the advanced GDP figure, second one being the preliminary, and the third month, the final number comes out. The one that tends to have the most effect on the markets is your advanced reading here. This one, because the core GDP is a quarterly release, what happens is traders look for little hints, little potential suggestions in the numbers leading up to that, and the advanced GDP release definitely has the highest impact when it does come out. So make sure to mark that one out on your calendars as well. Generally, how this works with the GDP is if the GDP comes in greater than forecasted, the currency should see an appreciation. So if the country reports higher than average or higher than forecasted GDP figures, what you'll often see is an appreciation in that currency, and vice versa. If we see the number come in lower than forecasted, more oftentimes than not, at least in the longer term, we'll see a depreciation of that currency in the medium to long term. So let's get on to the third most important economic news event, and we'll get that with you shortly. All right, guys, so we're coming back at you here with the last 3 economic events that have a high impact, or rather high volatility in the Forex markets upon release. And the third one here is inflation rates. So inflation rates are extremely important because a lot of the central banks tend to keep track of these, and they have monetary policies in place to work around inflation. So if inflation's too high, they're able to restrict money, restrict lending, and bring down monetary tightening policies. If inflation is low, they're able to encourage spending, encourage consumption by dropping down the rates. So the two main factors here that we look for are the CPI and the PPI numbers. So the CPI is the Consumer Price Index. This basically tracks how expensive it is to purchase goods and services, whereas the PPI tracks the Purchasers Price Index, which shows what purchasers are paying for certain goods or services. And traders often use the PPI number to kind of forecast the CPI number, because generally what we tend to see is that purchasers will press the additional costs onto the consumers. So if you see a higher or an increase in the PPI, chances are you'll likely see an increase on the CPI as well. So this is a big report to watch out for, and this is released around mid-month. That number reflects the previous month's data. So make sure to keep that on your calendars. CPI and PPI numbers are big, high impact events, and these guys can move the markets. So again, it's good not to have any positions open prior to them. If you will be day trading, if you're looking to swing trade or position trade, you'll likely have a position open and you'll be doing more managing than entering new trades. We don't really recommend entering any new trades into the release of these numbers. Only if you're actively managing a position into them, you can look to take some risk off. But again, we never recommend opening a new position prior to one of these releases. So with that said, let's jump on to number 4, retail sales. So retail sales are a big one. And the reason that they're very big is because they tend to be a leading indicator. What that means is basically a lot of the consumer consumption accounts for a large portion of the GDP figures. So because GDP is a quarterly release, we like to look at the retail sales to kind of get an idea of how consumers are feeling about their economy, whether they're confident or whether they're not confident about their economy, and the retail sales numbers show that. So these are released 2 weeks after the end of the record month, so right around the middle of the month. And again, these track the total value of sales in the retail sector. So this gives us a good idea of how the retail mind is thinking, whether they're optimistic on the economy or whether they're pessimistic on the economy, and whether they're actually putting their money and consuming, or whether they're not using their money to consume and add to the GDP figures. So again, this one is released around the mid-month, and you want to keep that on your calendars as well because it is a big release. Finally, and most importantly, we have number 5. These are the central bank meetings. So most central banks will meet once a month to discuss the economy, to discuss inflation, and take a look at some of the routes that they can take to make sure that they're hitting their targets. And so these are released on a monthly basis. And usually what we'll see with these central bank meetings is the funds rates. So a lot of the interest rates for these central banks are updated or increased or decreased in these meetings. And so an increase to the central bank rate is generally seen as bullish for the currency, whereas a decrease or a cut is also seen as bearish. So that being said, this release itself is not what is most important. What is most important is the policy statement that follows these releases, and that's simply because in these policy statements, the central bankers will give you forward guidance, a forward outlook based on what they're trying to do. So while this number is often baked into the market, traders will be keeping a keen eye on what the policy statement is, what the forward guidance is, whether the central banks are looking to maintain the stance that they had previously, or whether they're looking to change stance and implement a different type of policy. So this can be considered something similar to what we saw out of the Fed last week. They were saying that they're going to be expecting somewhere in the neighborhood of 3 rate hikes in 2019, and they did a complete U-turn last week, and they mentioned that they're not really planning on any hikes for 2019 and might see 1 or 2 in 2020. So this again caused a lot of volatility in the dollar and the dollar denominated pairs. And so that is one of the reasons why you should always have these central bank meetings and these policy statements on your calendar, so to make sure you're not opening any positions around them. but taking advantage of the volatility that comes after the releases. So with that said, I hope you guys are now have the knowledge and now have the top news events to look out for. So when they pass on the calendar next time, you'll be well prepared to take advantage of the opportunities that do come as a result of these releases. So with that said, if you guys do enjoy this video, do enjoy the videos that we do upload, please make sure to subscribe and check the little notification bell on the side to make sure that you do get updated when we upload any new content. And remember, if you guys do enjoy these videos, like. That's all from me today, guys. Good luck and good trading. Until next time, Mark from Trade Pro Academy signing out. Take care.